Good morning, good afternoon, good night. Welcome back to another schema scalper video. Today is currently Monday, the 19th of February. So inside of last week, I took a MyFundedFx challenge, a 50k challenge. The goal is to trade it live on YouTube, not live. Show my trades after the fact and just keep showing my account history, just so you guys can see that these ideas and concepts that I'm showing you actually work in real time. They can be applied in real time, and it's actually really simple. So let's get into it. Let's first go to MyFundedFx. I'll show you the account. So this is the account number 81851465. So every video I'm going to do, I'll make sure I show that account number again, just so that you guys can see, like, I'm not trying to hide anything. I'm not changing accounts to another simulated account and showing profits on there. I'll just keep showing this. So today is Monday the 19th. I took 2 trades, 20 lots, 7570. That was the profit for the day. 7570 is around 15%. Let me just do the math quickly. 7.5 times 2, 15. Yeah, 15%. So that's how much I made for just today. Friday, I took a loss, 2%. Thursday, took a loss of nearly 5%. So what I didn't understand about these rules, let me just go back to my overview. So, okay, it also says here 8% hasn't been reached, but it has. If you do the math with that numbers, you'll see that the 8% has been reached. I don't know if it's a glitch on their side, but it has happened to me before on MyFundedFx. If you guys trade MyFundedFx and this happens to you, just wait till the next day. If it still shows the same thing, take one small trade and see if it like does something different to your equity or whatever, because this is not correct. Okay, so let's go back up. Oh gosh, I didn't show. Okay, good. I thought I showed my credentials, my login. Yeah, that would have been sad. But let's get back into it. Okay, the 3 days took how many trades? Let's go back. Daily overview. So I took 3 trades, 2 trades, and 5 trades. And you guys see 105 lots, 20 lots, 20 lots. So I'm not trading really big stop losses. That's why you have this 20 lots, 105 lots. Like you'll see, I took 5 trades. I think I lost all 5. Yeah, I lost all 5. 3 trades, I lost 2 and 1 was break even, but I still lost that one because of spread and commission. So I lost 0.5% there per trade. Oh, sorry, 1% per trade, $500. And yeah, I lost about 1% per trade. But the trades that I win is like, it's massive. It's like 5 to 7% with the same 1%, sometimes even 0.5% of risk. But with this trade that I took today, I was really confident in the trade. Yeah, I'll show you the results of my previous trades. So I've took 10 trades, I've won 2. It's 20% win rate, which is crap in my eyes, not gonna lie. Just because I don't know what GU was doing on these days, it was weird. NAS, I shouldn't have actually traded any indices now. I should only be trading GU. But you can see the times open, times close, prices that I'm at. Like everything is going to correspond with what I'm showing you in the chart now. So it's full transparency on my side. Daily overview, 2 trades, 7570. Now let's get into the chart. Okay. Simple, easy, not complex at all. Everything I'm showing you now, I've showed on my YouTube channel in various other videos. So if you have any like problem keeping up, or you have any question, type it in the comment section. I'll link you to a video, or I will create a new video just for you. Okay, let's get into it. So you have day open. I always mark day open. No matter what chart I'm on, I always mark midnight New York. Everything's in New York time. So between 2 and 5, I'm looking for a level that's been hit here. So 0, 1, 0.5, negative 1, negative 1.5, negative 2. All of these levels I'm looking at. I'm looking at the 0, 1, 0, negative 1, and negative 0.5. That's the three levels I'm looking at for reversals today. So it hits that level during the time, hits the level, creates a swing high, right? Now going to a 5-minute chart. All this stuff that's here on the chart I left there because that's what I was looking at in the moment. Okay, we've got a fair value gap here. So I could have taken an entry up here already, but I thought this gap was a bit suspect, like it's gonna get ran out and then go lower and then come back into it. So something like this, but actually go lower than this low. So because I thought the gap was a bit suspect, I went into a lower time frame. So at this point, this is all I was seeing. Went higher, broke above the high of that gap, and then I went into a low time frame. Okay, now this is something crazy. This is something crazy. So you'll see this level here, the 0, 1, negative 1. Right there, that is, I haven't showed this yet, but I don't use this often, but I do use it sometimes. It works most of the time, but you have to understand the narrative of why it's working and why that level should be protected. So that's the 5-minute fair value gap, this box over here. Over here we've got this low to this low, sorry, this high to this low. That creates a fair value gap on a 2-minute chart, right? And now that gap doesn't get filled. So I can't show you 2-minute chart now because I don't have premium. I don't want premium right now. I'm super chill with what I have. What's it? Pro, whatever. TradingView Plus, TradingView Plus Ultra, whatever it's called. Okay. So I anchored a fib from this low. It's not on this low, it's on this low. I couldn't do it on my laptop because I was busy, so I just did all this on my phone. This low to this high, right? And then it usually gives one standard deviation up, and it will call like the high of that projected range. And this works if you understand why it works, and there's some technicalities of there's some technicalities. So go and look at this. So it's swing low to the high of the fair value gap with buys, or like the high of the low of the third candle, sorry, that creates that fair value gap, the low of that third candle. And now with that, I just bought up here. Let me check I'll check the time now and I'll make sure. So we've got fair value gap, we've got another fair value gap that doesn't get filled completely, have that projection, that's the high. So that's my swing high for the day, high of the day. Just mark this out. Potential high of day. That's my potential high of the day. Now we've got the swing that almost hits the high of the day. Also you see over here there's a move up, a fair value gap up through that what's that, zero level, I think. Oh yeah, that's a zero level, through the zero level, and then there's a fair value gap down and another one down that takes out this low of this fair value gap. So that's immediately telling me we're going lower. Here's a fair value gap that's taking out this fair value gap that pushed up. So immediately we're going lower. If I can buy anywhere above this, anywhere in this range, I'm happy. Sorry, sell. If I can sell anywhere in this range, I'm happy. That is what I was thinking in the moment. I'll just make it blue. Anyway, in there I'm happy. And once this pattern showed itself, I understood that okay, boom, we haven't reached it here. We've gone down, pattern showed itself here. We haven't closed this gap fully, and this is now what I would look at as a measuring gap. I'm not sure if it is called that, whatever it's called. Don't quote me, I just use this stuff, I don't care about the names. Goes up into another gap. While I was looking at it, I didn't see all this stuff. I didn't see this gap here because I didn't need to see it. So it goes up into this gap, creates a high swing point, there it goes lower. No wait, I did see it, sorry, that's the entry I took. That's what I entered off of. I understood that this was a projection just above the fair value gap, not taking out the high of this fair value gap. Boom. And now comes something interesting, super interesting. And super techy as well. You're going to see something crazy now. You see the projection I made? That high. Now look at the low to the left of it. Sorry, the high to the left of it and the low to the left of it. So this swing low here and this swing high here. If you take that range, you can get a projection, the low or super close to the low of this session. Doesn't happen all the time, doesn't work all the time, but most times looking at these projections, they work. Okay, take that off the chart. Let's get back into what I was seeing, why I held the trade. Okay, let's go back into my account, trade history. What is the time? 10:31, 14 seconds, 10:28, 45 seconds. I can't go into seconds chart, but 10:48 would be just make sure. Wait, it's 9:48, so that's plus 1. Can't do time conversions now, but let's 48. I'm just gonna put it on 48. 3:48, this candle I was selling. $48. Selling inside there. Stop was above this high, so 6 points. And my target was this first level, so this level and this level below open. So that is from here, that's 1 to 3.5, 1 to 5.6, and now is where the magic happens. Dun, 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 dun. I'm gonna close this. 10:31, 26250. 10:31. Oh gosh, I'm looking at the wrong time. So that is 10:31. 10:31's up here. Boom. Yeah. Let's actually change the time. Let's look at this. Let's do something quick. Let's check the time. This is just for the video's sake. So daily overview, GBP chart, let's take a trade just to check the time. Put on one lot, sell. and close. Okay, so now it should show 3 trades, 21 lots with 75, what's that, 3, so 7567, 7560. Yeah, I forgot to add the costs and stuff, but yeah. Okay, so I just open the trade just to check the times, so I wasn't too sure now about the time conversion. So it's 1833, so we're changing it to +2. Then I can show you the exact time. Cairo, let's choose Cairo. So it's 10:31. So I entered here. There was no position, stop above the high, and 10:28. Literally off this swing high. Let's look at the price. 260, 21,260. Short 28,260. And I had my stop above the day, high of the day, potential high of the day, sorry. It's a bit over. And as soon as I saw this happening, with this swing projection, hitting a swing projection and creating a swing high, and the next candle closing red as well, I immediately entered another position, moved my stop, so I removed a lot of the risk. So I basically off the risk, entered another position, and then I was in 3 points and 2 points. So it's basically the same amount of risk as me opening one position, having it here as high of the day, which is the 1%, or around 1%, I'm not sure. Right? So I had 1% on the trade. It was 1 to 14, and probably the same 1 to 14. Yeah, about the same in this area. This is just what I think is going to be low of the day, these double bottoms, and that's my entry. This is how I got confidence to actually hold the trade for the rest of the day. So you see this big retracement, not actually that big, but this retracement here, if you understand the context of the retracement, it goes back into a 5-minute fair value gap that's made here. Let's change it back to -5 to New York time. So the fair value gap that's made at 350, I extended this out because these kind of gaps, they can be traded to multiple times. So it's like it's hit here, it's hit here, hit here, and it will still be sort of valid. There's times when I look at gaps and I'm like, no, it's not valid, like over here. This one is still valid. Anything that happens outside of these ranges, I look at them as one and done. So it's outside of this 2 to 5 range, 7 to 9 range, or let me just scroll here, this 10 to 12 range. Anything outside of that, I look at it as one and done. So as soon as it hits it as a reaction, I'm not looking at that to have reactions again in the future. It could have reactions again in the future, but according to my study, most of the times it doesn't. So this is what gave me the confidence to stay in. The high of the day is made usually in London. So there we go, high of the day, a retracement back into London's price action, boom, sell off from this level. As we enter New York, I understood that it was already sell off, so we could return back up into into and above the opening price for the day, which was over here. We got really close to it. We went into a fair value gap over there. Let's just make this a different preset. Holding. So this is what I mean by one and done. If it hits there, like here, if it hits here, doesn't give a reaction, I look at that as done. Hits here, gives a reaction, that's done. Okay, could have gone up into here. This is what I was expecting, but it didn't, and that's fine. Oh, it's not actually a gap. Okay, cool. Good thing I zoomed in. It does look like a gap there, but it's not a gap. Okay, cool, perfect. Boom. It's a 5-minute chart. Hits that high of the day. Then if you understand and you watch my other video, this right here is a breaker. Let's go into, I'll just do CE. This area is a breaker. So it's the high of this candle down to this low. The low of this candle, both red candles, overlapping with this, overlapping with the open, trying to reach the open to give everyone a chance to enter. Sell off into London close, which I'm expecting to make the low of the day somewhere here. That's what I'm expecting. I'm not saying it's gonna happen, absolutely. That's what I'm expecting. Okay. And that is how I passed my MyFundedFx in 10 trades, 3 days, however you want to look at it. Simulated, here we go. Now it's showing the right amount. You see, earlier on it was showing something like 6%, 6 point something. Also you see I have a really bad throwdown. Go back, so balance, equity is just showing what's the equity for the day. So I've closed all my trades. Now I'm just waiting for tomorrow, and then this will reset and I'll get a message saying I passed the funded account. There, simulated loss, current 0, max, loss level 0, target, hit the target, perfect. Okay, same account. You guys saw me take the one trade with the one lot, and that number changed. Okay, that's it for this video. If you guys enjoyed it, leave a like. I'm going to continue the series. I'm going to post, I don't want to say every day because I'm not trying to trade every day, but this is it for now. This is how you bring accounts back from deep drawdown. Having trades like this where, okay, I said that's the end of the video, but let's continue just because I have this thought. Where if you're entering close to the high of the day, or what you're expecting to be the high of the day, and you see another point of entry, like a valid point of entry that fits a model that you have, take that entry, remove the risk of first trade, enter with the risk that you took away from the first trade onto the second trade. So you have 2 trades open, the same amount of risk, but now double the reward. The same amount of risk as in terms of money risk, but probability, your probability does go down a bit. But in terms of monetary gain over the long term, I think this is something that's really to be looked at and looked into. And with that being said, cheers.